The investing frenzy in AI has raised bubble concerns, or bubble hopes, I guess, depending on which side of it you're on and where you think we are. Joining us now with more on investing in tech in this current environment, Mitchell Green, Lead Edge Capital founder. Good to see you this morning.
Thanks for having me on.
How do you approach this? I mean, obviously, there are the big obvious ways to play the overall AI infrastructure investment theme. We're going to be talking to Jensen Huang in a little while. But in terms of looking at software, at applications, at what companies are actually spending money on in technology, how do you sort it out?
You figure it out, let me know.
Yeah, exactly.
What I can tell you is that we are not, one thing is investors are clearly becoming schizophrenic. And companies that grow 40, 50% a year like a Figma, investors have no concerns of. Yet if you grow 5 to 10% a year like
nobody wants.
Like Adobe or Workday, which the stock is flat over 5 years.
Right.
They're doing $2.5 billion of free cash flow. It's still growing 15% a year, but people are just throwing Carl and Zane out to the ship. Those companies are going to benefit from AI. They own the customer. The idea that you think Procter & Gamble and Nike and Pepsi are going to rip out their ERP systems, which by the way, took a company like Workday 25 years to win. The idea that they're just going to put it in some new Workday.ai app is crazy. And all these companies are building their own assistants and AI tools as well. So we think a lot of the incumbent software companies, if they innovate, will, and continue to invest in this stuff, will actually win at the end of the day.
With their own software, or will they have to partner up with some of these other companies and allow them in to share in some way? Some of these partnerships that we're constantly seeing.
And what would it be an example in your mind?
Well, I just look at the partnerships that are building with all of the AI players in every single way. Do these software companies get there on their own, or do they do it in ways
that
Oracle is letting people?
Microsoft is the biggest one. It surprises me, but again, the numbers are totally insane up and to the right. That company like OpenAI would have a $500 billion valuation. And yet you see that you're going to go compete directly against companies like Amazon, Microsoft, Google, that can spend, no kiddingly, $50 to $100 billion a year on free cash flow. I think a lot of the software companies, it depends what you are. I think if you're an application software company, you'll go more at it alone. If you are one of the big giant Microsoft platform companies or an Oracle, you're going to partner with these things. I think at the end of the day, who's going to buy this stuff? You have to go ask the Procter & Gamble's and Nikes of the world, how much money are you going to spend and when are you going to start to see real ROI on it? I do think people are starting to see it around the fringes, but we are still in the very early innings of it.
I mean, some of the conspicuous examples of the big software players that people are now asking questions about their franchise would be like a Salesforce, would be like you mentioned Adobe, ServiceNow, and all the rest, where, they may own the customer right now, but what's the value of their coding expertise in a world where the AI models can
One thing that I believe a lot of investors get wrong is that they believe software companies are like chip companies. Chip companies have hardcore tech. Software companies are not building software code is not extremly complicated. These software companies are actually distribution businesses.
Right.
We have a business in Nisswa, Minnesota that makes Chamber of Commerce software. It's a $40 million revenue business, grows nicely profitable. If Microsoft wanted to destroy that business, they could put 100 engineers on it. We have 20, and in a week it would be gone. Why don't they? Because there are tens of thousands of micro verticals of software, and nobody can attack everything at once. In software, the moat for what we've seen has never really been R&D development. It's been distribution, it's been sales, it's been customer success.
So do you own a lot of those software companies like a Salesforce, which is down 17% over the year, or Adobe, like you mentioned, it's down 30%. Do you own those?
We tend to focus our own fund on smaller companies, but I believe in public markets. You make a lot of money buying things when people are down. China. I've been out here the last year, saying we like China. Alibaba stock is up 70% or something in a year. If you believe buying companies that have great software franchises with customers that love them, with great gross dollar retentions, companies such as Workday, Salesforce, there's a handful of other ones. are probably good bets over the next 5 years. Now, if they don't innovate,
right.
so if you looked at the top 100 e-commerce companies in the world, a lot of those companies existed in 1995.
Sure.
Home Depots, Lowe's, you name Target. Who doesn't? Sears and Kmart. And why did Walmart become gigantic? Because they hired a ton of software engineers and they became a quasi-tech company. People shouldn't forget this. In 99 and 2000, or 98, whatever, social media did not exist. Maybe that's better for society, but they didn't exist. Today, there's $3 trillion of market cap in a category that did not exist because of the internet.
Yeah, at least. Yeah.
The same thing should happen in AI. Things that are going to be gigantic, nobody's even talking about, including myself.
Right.